Hey, what's going on, everybody? This is Ray Robinson, aka Da Vinci Code, coming to you. Markets just opened not too long ago, and I've been looking at this pair over the weekend, and I actually see a nice um, trade opportunity that I normally take. For most of you, you all know that I trade harmonic patterns, and that's pretty much all I look for in the markets. That allows me to have high accuracy whenever I'm trading. But at the end of the day, um, this is not trading advice at all by any means. This is just my own personal analysis. So don't go in here doing anything crazy, anything stupid or anything like that in the markets. Again, I'm not a financial advisor. This is just purely my trade idea, that my own opinion. So take it for what it is. But I'm just gonna go ahead on and dive right into this and show you guys exactly what I see in the markets. Looking at New Zealand US dollar, NZD USD, I see a nice big harmonic pattern within this section right here that most people who trade harmonics, they normally take. But I'm gonna give you a little bit of time, like 5 seconds, for you to be able to identify what pattern this is, and then I'm gonna dive right into it. So if you guess the Gartley pattern, you are absolutely right. So looking at this, if I take this to a higher time frame, we can see that we've been in a for the most part a downtrend over the past few weeks on New Zealand US dollar, and over the past since April 8th. Well, yeah, since April, the market has been continuously going down. And what we have right now is a nice Gartley pattern that has developed right here. And I've been looking at this on an hour time frame, looking for a opportunity for me to enter this trade. So if I go ahead on and zoom out and go ahead on and mark up my chart and show you guys exactly what I see. What we have right here, I like to say the market moves harmonically, and it's pretty much a code telling you what a code in the market and a harmonic patterns pretty much decipher that code. So looking at the market, the market always has a period of consolidation where it will then form a impulse leg to the upside out of that consolidation period, or break to the downside and create a level of support. So we can see the market started to consolidate right here in this zone. Boom, made up its mind, created a level of resistance. Okay, so based off that level of resistance, all I'm doing is following the market down to this level of support and waiting for the market to give me a nice retracement back to the upside. So I'm measuring out these moves right here, XA, B. And you all who've been trading with me for the past, for the past month or whatever, been in my pip talk, you all know that the B leg right here is always going to tell you what you should be looking for in the markets. So looking at this chart, what I'm going to do is identify my key level of resistance, which is here, and key level of support, which is obviously right there. And then I'm going to take my fib take it from this high point all the way down to this low point and see what this retracement level gives me. So based off this retracement level right here, price pushed up and gave me that 61.8. For you all who've been trading with me in Pip Talk and follow me on IML TV, you all know that that 61.8 level indicates that we're looking for a Gartley harmonic pattern based off of this retracement level, which is considered our B leg. So we have our X level of resistance, our A, which is our level of support. XA to B is going to identify what harmonic pattern we're looking for. So based off of that, looking for a Gartley pattern. Now what I'm going to do is then take my fib from a level of support, which is here, this level of support, up to this level of to this retracement level of resistance right here, and see what this level right here gives me. I'm looking for a minimum 61. Let me scratch that, 61.8 retracement level, okay, percent. That's what I'm looking for this pullback right here to identify my C leg. So what I'm going to do is take my fib from my A leg all the way up here to my B leg, and let's see what this level gives me. Let me go ahead and line that up perfectly. I like to get surgical in these markets. Boom, perfect. We got that 61.8 touch right here. As you can see, 61.8 right here. Price then proceed to go all the way down to the 78.6, which is perfectly fine. As long as this leg right here, the C leg, doesn't exceed past this level of support, which is my A leg, we're perfectly fine, okay? So price came down and gave us that 61.8 touch. Now, what I want to do is take my fib from the entire move from my X leg, from my X all the way down to my A leg. That's what I want to do. I don't want to do that. And I'm looking for the completion of this move. Now, the completion of this move is going to indicate where I enter for a bearish Gartley. So take it from X all the way down to A, and I'm looking for a 78.6 right here. You can see price then came down or pushed up and gave me that 78.6 touch right here. But I'm not done yet. What I want to do now is look for another point. So what I want to do is take my Fibonacci extension or my fib tool. I can take either one of these tools right here. Either one of these, this right here or this right here. So what I'm going to do for this purposes, let me go ahead and circle this again. I'm going to take my Fibonacci extension tool. That's what I like to use. Take my Fibonacci extension. I'm going to take it from, first let me highlight this again, X, A, B, so you guys can follow me in the markets, X, A, B, C. And I'm looking for the D completion. So I'm going to take my Fibonacci extension tool. I'm going to take it from X. No, I'm sorry. I'm going to take it from A to B, all the way back down to A. So it's three points, X, A, all the way back down to B. I'm sorry, A, B, all the way back down to A. And I'm looking for that 1272 level, which is right here. You can already see I have that zone highlighted. So this is an area that I'm looking for entry point for the completion of this move, this bearish Gartley pattern. So price pushed up, hit this zone. Normally when I'm looking for a Gartley pattern, you're looking for 2 entry points. You're looking for 2 points, and I like to highlight it as a zone. Price then pushed up into that zone, giving us an entry for this bearish Gartley, and we can see that price is currently sitting into that zone, and I'm looking for price to continue to push down to the downside. So with that being said, I'm going to go ahead and clear all of this, and let me draw this harmonic pattern up. Taking it from my X to A to B, B to C, C to D, where it completed. Since price pushed all the way up here, I'm just going to go ahead and connect it right here. And this is our entry point right here for this bearish Gartley harmonic pattern. Let me line that up perfectly. Bearish Gartley harmonic pattern. There we go. Well, all right, there we go. So now to identify my targets in this trade, what I want to do is take my fib from my C point all the way back up to the completion of D. Even though it completed right here, this is where our originally entry point was. We have to take the completion of the entire move where it completed. So it completed right here. And what I want to do is go ahead and highlight this 38.2 for my target one, 38.2. Let me go ahead and turn this green, 38.2, and I'm gonna highlight the 61.8. 61.8. And for my stops, since normally my stops I would have entered somewhere in this area, my stops are going to go, normally they would go about 50 pips above my X leg. I say about 50 pips below my X leg to give me some breathing room, okay? But since we're looking at price right now, and this is where we currently where price is, I'm gonna go ahead on and put it about, let's see how many pips that is, about 100 pips above. And when I'm on a higher time frame, what I like to do is lower my lot sizes whenever I enter this trade on the much bigger time frames, and be able to manage my position. So I'm going to go ahead on and turn this red, change this color red for my stop loss. And now I have about 100 pip area for breathing room. I don't want to put my stop loss right here at this level of resistance, because price, what might happen is push back up, retest that level, and then drop. If I have my stops up here, it's going to stop me out of that trade, and then, push into the direction that, I want to go. If price break above these levels up here, then I know that I had it wrong. So this is what I see on NZD USD. Looking for potential. How many pips is this could possibly give us? And plus, this is in a downtrend. So from where price is currently at, that's about a 40 pip move to the downside. And target 1 and target 2 is about 93 pips. So if you aim in target 2, you're looking at a 1-to-1 ratio bait pretty much. And understand this is in a downtrend, downtrending market as well. So with that being said, when price hits target 2, if it hits target 2, not saying that it is, but if it pushes down to that level, then guess what I can do? Since I know that this is a downtrending market, I can expect these lows right here to be taken out and price continue to drop a little bit further. So guys, once again, this is Da Vinci Code, aka, my bad, this is Ray Robinson, aka Da Vinci Code. If you find value in this, definitely definitely watch this video over and over again and learn how to trade this bearish Gartley Harmonic pattern. And I'll see you guys on my next session.